Given the current climate for fintech in Latam, what's your biggest headwind and your biggest tailwind?
So money, it's our biggest leverage. I think that money, like the paradox that I usually talk, there's a lot of money, and I usually have to stop having conversations with private funds that need to deploy more money. I think the hardest one has been like getting fundraising. Just to be honest, like it hasn't been a good time. What we have shown is we can do it. We can do it with going 25%. What it has worked on that is we have changed the way we reach out to investors.
Hey everyone, welcome back to the Ignite podcast. Today we're thrilled to have Nicolás Villa on the mic. He's the CEO of Platam, a Colombian fintech rethinking how SMEs access credit, and a serial entrepreneur who spent years building innovation infrastructure across Latin America. Thanks for coming on, Nicolás.
Thanks for having me here. It's my first podcast in English, so yeah, it's going to be hard. You need to give me some time to lose my tongue, but I'm happy to be here, and it's going to be a great time.
Great to catch up. So I'd love to start with your origin story. What's your background?
So my background, been into entrepreneurship for about 6 to 7 years. I started my first company when I was 27. I actually started it as a consulting company in innovation and transformation for big organizations. That was a really good venture. It wasn't a big company, but we had an acqui-hire because we built a company. We built a platform for open innovation around Latin America. And I got to work as a consultant in open innovation for biggest companies in Latin America, like Huawei, Deezer, Inditex. So that was a great experience. After the acqui-hire, I lived in Mexico for a while. Coming back to Colombia, my co-founder had been, I think, like proving the concept of Platam for about 1.5 years, getting the money back. That was something very important for him, obviously, as a financial expert. And he said, okay, we need someone to grow the company. Let's bring Nicolás. We meet each other by chance. That was how I got into the company. When I started the company, it didn't have a sales team. There were like 3 people organically selling. They were actually growing. That was a surprise. And the first time I saw this is something like very surprising against consultant, because you actually push consultancy services on the company, right? Like you really need to sell those. And something like a credit is the other way around. The company is selling themselves for you to give them credit. So that was one of the biggest prizes when I arrived to the company. And happy problems that I had is like, there is a lot of demand for this product, something that I didn't have in my previous companies.
Yeah, what was the aha moment for you when you realized that SMEs, small to medium enterprises in Latin America, were massively underserved by traditional finance?
Well, I have lived this as an SMEC. This wasn't my first company. I also founded a company in Mexico. And obviously, like the first thing that in a young, I think, entrepreneur says when they are looking to get some funds is, okay, I'm going to venture capital. And then you say, okay, am I building a venture-backed company or not? If you're building
like a venture scalable, business.
Yeah. Is it scalable for venture capital or not? If it is not, then your doors are closed, like mostly closed to raise capital as debt or credit or even investment. So I live that. For example, I always say my first company, I had my first credit card for the company like 3 years after it started. And it was a loan application for a credit card. And they gave me like $2,000 credit line. And my personal credit, was like 10 times that. And I was like, it's impossible. Like if you look at my numbers as Nicolás Villa and the numbers of the company, the numbers of the company are much better. And it wasn't attractive for banks. So I lived that. I lived how companies were going to pay me, like big companies were going to pay me 60 days, 90 days after. And I needed to pay my employees at the end of the month. So when I arrived and I met Rodrigo, like building this, I was like, this is genius. Like I wish I knew like a solution like this one before because that was a real pain. Like I couldn't grow. And of course, when I started like thinking about being the CEO of this company, I started my research, and I knew like building companies, of course, was difficult. And I knew from before data that was pretty impressive, and it's like only 30% of companies in Colombia survive after 5 years. And that was sad, of course. But then I knew, investigating about this huge problem, is like 92% of companies don't grow. So if you are building an entrepreneur, a company, if you're into this entrepreneurial venture, which is pretty hard, your chances are you're not going to grow. Like 92% of companies don't grow. And the number one cause of this problem is lack of access to working capital.
So you built a bunch of stuff before Platam, worked through lots of different companies. How did your path background influence how you're kind of building Platam now? And maybe we could back up and tell the audience what Platam, what it is, how it works, and how they all tie together.
Perfect. So we are reimagining how companies or how SMEs access to working capital, to credit. We built and what's growing is embedded finance company. So we embed directly where that MSMEs are actually working, whether it's buying or selling, and we give credit to their clients and suppliers. So whenever a company it's selling to a big company, MSME is selling to a big company, the big company usually says, I'm going to pay you 60 days. And the first thing that we do is we partner with that big company. That big company is going to continue to pay in 60 days. But now that big company, because of the partnership that it's made with Platam on the ERP, or the supplier portal where you're uploading your bill, your invoice, it's going to say, okay, do you want to advance this payment? Do you want to have the money before 60 days, or are you able to wait? And most companies are not able to wait. So what we do is we advance that payment over a small fee. That's the first thing. The other partnership that we make is we partner with suppliers that sell to thousands of small MSMEs. Those can be beauty salons, hardware stores, mom and pop shops, whatever. Those stores, those micro businesses usually didn't have the cash on hand to buy from the supplier. So what we do is we open a line of credit inside the sales channel of that supplier so that the MSME can buy. It's mostly a BNPL B2B solution. And that has been incredibly helpful for companies to get credit where they buy or where they sell. And we have been growing consistently 20% month over month in our portfolio. And it has been something amazing because private funds in Colombia and regional private funds are deploying money using our rails. So what we are actually building is not only a like traditional lending company, it's a company where capital can flow through those MSMEs.
That's where the word embedded comes from, because it's embedded in supplier networks and you're leveraging these commercial ecosystems rather than going direct. So it's almost like a channel first kind of model, because you're going to suppliers and saying, hey, could you increase your order size if you had some credit you could offer to some of your buyers? And the answer is probably typically yes, we probably could. They're cash constrained. They have to buy inventory or whatever the supplies are, and then go sell them or add value to them and sell them. And so now they can use credit to help that cash flow conversion cycle in their business, which greases the whole market, right? And then you described something else, which is really interesting. You actually bring, you're creating a financial vehicle for people to have these, supply and inventory backed, financial streams of income, right? So I can go put money to work on your platform to generate a return, and you actually can package that up as securities and sell it to investors. Is that right?
You need to have a couple of millions to put company online.
Yeah. So they're institutional investors. So
institutional investors.
Yeah. And what's the yield look like?
We started working with friends and family at the beginning. Like friends and family gave you money, and they were okay. Go ahead and allocate that money into MSMEs and see if it works. If we actually get the money back, and we started like having good returns and a good default rate and a good interest rate, and that's what we like opened, like touched the doors of these big institutional investors, in which like pension funds, and it's like, okay, you wanna lend money to MSMEs to buy their supplies or to advance invoice payment. Yeah, I do want to do that. And I want to do it with $5 million. Like, I need to start big. I'm a fund that has to manage 100, 200, like maybe $500 million with a team of 5. So don't sell me 1,000 to 1,000 invoices, because I'm going to get lost, and this is going to be incredibly difficult. Like, sell me the whole package. Sell me a package of $1 million that I can use, and I can really do that.
What's the kind of yield to maturity, and what's the typical maturities? Because if it's supplier-based financing, these are typically like, net 90 kind of things, right?
Yeah.
Almost behaves like a commercial paper money market, right?
Yeah.
Where money's flowing in and out. And what's that yield typically for your investors look like?
In Colombia, it's going to be difficult to say, but yeah, in Colombia, it's going to be around 20 to 25% a year.
Wow. So this is, and that's backed by literal supplies of inventory the suppliers are selling into these buyers, into these networks. And so you can get a really nice, 20 to 25% return on money. So I bet you got investors lined up. You probably have more investor demand than you can fulfill.
We do.
Yeah.
Like, access to credit in Colombia and Latin America is pretty hard. There's a financial gap of $1.2 trillion. For banks to lend to MSMEs is incredibly difficult, not only because they are slow and they don't have the technology to do it, but also because the law makes it harder to do, because you have to make provisions against the risk you're taking. Yeah, the law is making you that giving a loan that it's a small amount is harder for you, and it's more expensive than to give a higher loan. A recent study shows that, for example, a loan for a commercial, like a traditional bank in Colombia, if the loan costs less than $500, it costs to the bank $500. So it's a relationship between the loan, $500, and the cost, $500. And so you have to give it away for more than 100% a year yield or interest a year if you want to do it and don't lose money. So what we do is we kind of get all the money, even from banks, because banks also want to deploy money into the segment that we're working, and we give them the yields that they are looking for against the risk that they are taking, of course. But for the public to have a relationship between the interest rates in Colombia against the interest rates in United States, kind of 20% here can be a 10% there in the United States. So if you want to make a relationship that's real in the United States, it's around 10%.
Yeah. What's exciting about the business, and for the audience, or full disclosure, Team Ignite's an investor, is the inherent network effects in the business, right? You have this supplier network on one side, then you have this buyer network on another side, and then you have the investor network on another side. So it's almost like this 3-sided network, and you guys are kind of sitting in the middle, and it just gets stronger the more you do it, right? You're probably seeing that already in some of the word of mouth and consistent growth that you guys are experiencing. One thing that you glossed over, you just kind of threw it out there, that I want to tease out for the audience, is the $1 trillion credit gap in LATAM. Maybe you can explain what that is.
Yeah. So let's start with the gap. And the gap is one of the most interesting things, because after the gap, there is paradox, and there is tons of money to be deployed in Latin America. And when you talk to these funds, it's like funds are lining up to deploy money using our rails. But when you get to those funds, I have 20 million, I have 30 million, I have 50 million. Like, they are not being deployed and not creating yields. And I need to deploy that money. I need to invest that money. And on the other side of the paradox, there is the 1.2 trillion finance gap in Latin America. And the finance gaps, it's actually because there is no bridge, like putting those two together, like the excess of money.
Before Platam, there was just no platform putting it all out there. You described, like, the banks can't do these microloans. Their cost to serve is too high, and it takes a platform with modern tech stack and AI to basically orchestrate this market, right?
Yeah. So what we started building is we started doing it with our money, and then after 1 year of doing it with your money, you said, like, you go to these funds and I'm doing it. This is working well. I have good default rate. My portfolio at risk is at a good stage. I can do it for you. Use our rails, and we have AI doing the recovery for us. We We have AI selling for us. We have the commercial chains or the supply chains that work for us without like closing one by one those SMEs. Like traditional lenders, and it's almost impossible to do it, but traditional lenders try to do it in Instagram and offer credit in Instagram. It's like you have to offer credit like really high interest because the cost of acquisition is high. So what we do is with these partnerships and with these outskirts, we have reduced the cost of acquisition and we have built the technology for those private funds to deploy money into the financial gap of Colombia. And whenever we talk with private funds and even with anchors or partners like distributors or buyer companies, it's like, are you doing this in Peru? Are you doing this in Ecuador? Are you doing this in Guatemala? And it's like, we will get there. We need to get it perfectly working here in Colombia. Like there is a lot to grow here, but yet the need, it's all in the region, and the needs, it's in India. You can see it in all these regions, right?
Yeah. How do you manage the risk in the portfolio?
So there's a lot of, how do I say, like technology and really investigation on this side. The first thing is it is really hard to understand companies, to understand MSMEs. So if you say to me, okay, I have this company that is selling $100 million. Can you understand that company? It's pretty easy to me to understand. Can you send me the financial statements? I'm going to read them in 10 minutes, maybe 20 minutes, 30 minutes to look at the investigation. And then have a proper risk assessment or a proper enough risk assessment to do. And the company is not going to change a lot in time. But whenever I get to MSMEs, the financial information that I'm going to get for financial statements and for the credit score system is not going to show the reality of the company. Why? Because these companies manage as much as cash as they can. They want to reduce income because they want to do not to pay high taxes. They are going to put as much cost inside the company, on cost, kids school, whatever is working on my house, whatever cost I can put in the company to pay lower taxes, I will do it. So whenever you look at that information, something like, well, you're going to see information asymmetry. So what you're going to see in paper is not going to show you the reality of the company. So what we have built is a credit scoring system that uses the data of the supply chain where the company is working to break this information asymmetry and to have more information to rebuild the reality of the company. And when you have that and you understand the industry, you're going to have transactional data. You have voice recordings with scoring systems, video recordings with scoring systems. You're going to have the traditional data that the banks are also looking at. You can build, like the model can build, the P&L of the company, like the real P&L of the company. And when you have the P&L of the company, you can decide which credit line you can give. What we have seen is it is not really hard to say I'm going to lend to this company or not. Like the decision itself is not the hardest. The amount is the hardest part. Yeah, I can sell. I can, like Brian has a good company. I'm going to give credit to them, and okay, so Brian's going to look at the $1,000 with like this doesn't do anything. It's like the credit card that I told you at the beginning. So I'm going to use this credit card to buy the television for my home, and that's it. It's not going to be a credit line for my business because you need $10,000, right? So the difficult decision is not whether to give them the credit or not, is the size of the line of the credit.
Yeah, that's the variable factor there, right? Because if they do $1 million a year, you may not want to give them $1 million of credit, right? There's some factor there depending on the credit score, and then you have to kind of calibrate that over time, like because as you increase the amount, you're increasing your risk basically, and so you're kind of trying to balance like the reality of their business and how credit worthy it is with how much you give them. That's challenging. We talked a little bit about your partnerships and distribution, but let's talk about your metrics, operating rhythms. What are you kind of watching closely? I would imagine default rates, but what else?
So of course, what we do is our income comes, or our gross income comes from, we allocate the money in an interest deal, and we sell that invoice, or we set that the debt for another year. So we allocate that 30%, we sell at 20%, that gives us 10%. And that's where our gross income comes from. So we measure a lot how it's our in the middle, like our gross income. That's something that we are measuring a lot. Retention is something that we are like putting our eye on today. We've seen like we have opened a lot of lines, and there is a considerable percentage of MSMEs that haven't used that line the first time. So what we are seeing is that we have spent some money in opening those lines, and not 100% of the companies are using lines. So we are going to get that number to 90%. We need to get it up because there is a lot of cost. There is some cost at the beginning to open the line. What we have seen is surprising, whenever they use it the first time, 90% of companies use it the second time. So there is a lot of retention after the first time. So we need to get it into the first time.
Yeah. So you talked a little bit about expansion. You know, there's adjacent Latin American countries. What do you think the first one you'll go to first out of all those countries available to you, and kind of what's your roadmap for the company over the next year or two?
So our thoughts are not going into the sexiest countries. So it's possible that we don't go into Mexico and Brazil at the beginning.
Yeah, kind of work your way up to that level, because those are much bigger economies, right?
Bigger economies, not also bigger economies, but there is a lot of credit offer already in those markets. But when you go into Guatemala, there is a really interesting financing gap there. When you go into Ecuador, there is a really interesting financing gap. And you take a look at the financing ecosystem and the startup ecosystem and the fintech ecosystem, and it's pretty empty. So there's almost no competition doing this.
Yeah. So kind of start
but
where
the funds, these national funds
yeah.
are there. So you have the money inside the country, and you have the problem inside the country, and there is no bridge between that. So what we have seen is there is a lot of countries that have the same conditions as Colombia, in which you're going to find almost zero competition.
And what's your roadmap for the next year or two?
So we're now at $10 million portfolio. I think what we were something like 0.2 million portfolio the last time, or when we signed our deal. So that's in 6 months from 3.2 to 10 million portfolio.
Wow, that's really great growth. Yeah.
Yeah, so it's by 3 in 6 months, and we probably
you keep that up, you'll be 10x year over year. I mean, that's the holy grail right now. Is, you know, if you can get the 10x year over year growth, it's you're on track to get a big Series A.
So I think we're gonna grow. Yeah, we're gonna grow between 5 to 7, hopefully 10 by next year. But our goal is getting to a $50 million portfolio. 50 million portfolio. What we are measuring right now, it's more focused on the lower revenue line than the upper revenue line. So we need to get our lower revenue line to $3 million, and then launch in a new country.
What are some of the biggest structural, regulatory, capital challenges you see ahead as you continue your expansion? So
first, in Colombia, and maybe you know, but there's like a top interest rate that you can charge, and that top interest
they cap it at the central bank, or the government caps it.
Yeah, so it's something that it's been incredible criticized here in Colombia. There's some big discussion. There is not political.
You're not really letting the markets work when you do that, right? You get dead weight loss in economics when you cap things.
That's right, and you get illegals to do it. So that's
right.
What
people start doing it under the table, which is worse. Yeah.
Yeah. So you don't only do it higher than the legal rate, but you do it with illegal practices afterwards, so that they are not really gentle or legal when they want to get their money back. So yeah, like I always say, is like put a cap price on milk, and companies like larger companies are going to say, like, okay, I'm not going to sell in like hard to access regions of Colombia, because like this is more expensive to access there. So yeah, you create an illegal market in those regions. So yeah, but for example, that's a big myth in Colombia, because there is a lot of ways to legally don't be stuck by this cap on the interest rate. The first one is discount rates are not under the cap. So I can say, okay, I'm going to lend you $100 and I'm going to deposit into your account $50. That's a discount. It's legal. and I can charge you 50% upfront if you are willing to accept it. It's like the capital is going to, the market itself is going to regulate it to the discount that works. A lot of regulatory affairs around lending caps that not only include Colombia, but also other countries in the region that can also investment vehicles are not as easy to create as other things, or others maybe don't even know what an investment vehicle is. But you need to create some investment vehicles with regulators so that those private funds can put $50 million and then that you can deploy that $50 million. And this is an investment vehicle that it's regulated by traditional institutions. It gets you like 6 months only to open one, to negotiate. And then it's old institution, traditional one, a slow one, managing that one. And then you need to kind of build the infrastructure, not only the credit infrastructure inside your platform, but the ecosystem infrastructure to connect this point to the other. And that's where the value of Platam is. There is a beautiful technology in the middle, but there are also partnerships with those private funds. There are the investment vehicles that are not easy to build. And that whole system is the one that allows you to break the paradox of the financial gap in the region.
Yeah. What about long term as you look out 5 or 10 years? What new products, markets, data, AI systems are you excited to build?
So as a solution for us is the next step here. Not only a solution where you sell the whole bridge, but a solution where you kind of sell parts of the bridge that you're building. And for example, our credit scoring is getting better and better every day. And of course, we have more data around that. We have a system that conciliate, but whenever we get a payment, we know where that payment comes from. And that's something that companies...
Yeah, it's like KYC, supply. AML, know your customer.
The KYC, we have an awesome platform for that too. For example, we are designing something for like really traditional companies in which they can do the onboarding only by voice. And those small parts of the software is something that you can sell even for other uses, not only as for lending. So I think our like long-term view is you build bridge, and then you kind of break the software in parts and you start selling the software in parts. That can happen sooner than we thought, because for example, we're talking with a company in Guatemala that wants the whole software to be used inside the company. And they have the financial institution in the company, in the group, in the corporate group, and they have the suppliers that need the credit. It depends on what the market is building, but we're going to build this missing bridge for as many countries as we find in the region, probably getting into Brazil and Mexico at the end of 3 to 5 years. And then there is also, and we have found this need in developed countries, Spain, for example. So we have also companies that talking to us, and this will be beautiful. It's like restaurants don't have credit in Spain. And that's one of the biggest industries there is. Yeah, so it's just a matter of finding two partners, the money and the supply chain to deploy that money. And so it's not that hard.
So Platam can go planet wide. It's kind of in the name.
That's another way to see it.
Yeah. Platam goes planet wide. Yeah, because there's other markets that you could just basically take your platform and pretty quickly adapt it. You'd have to figure out some of the accounting and tax and language translation, but you could apply it to Africa and India and Southeast Asia and everywhere. But start with LATAM.
Yeah, it's moving pretty fast. So change of language is going to be easier every day right now.
Yeah, we could have done this interview in Spanish, and there's AI that will translate you and make you sound, I think Google has that now. It just makes you sound like you're speaking English.
That would have been easier.
Yeah, it would have been easier. Yeah. Maybe next time we'll do that. Well, that's impressive though. I mean, I couldn't do a podcast in Spanish. So there you go. Let's wrap up with some final questions. What's a belief that you used to hold about SME finance that you now believe is false?
It's a good question. So I used to believe that there wasn't a big task on maintaining the credit score. So whenever you open a line of credit and then how long do you have to wait to do that credit score again?
Kind of
to see if the company...
credit score drift.
the credit score drift.
Yeah.
And what we have seen is MSMEs move fast, move as fast as startups. Like maybe they're not growing 20% month over month, but they are doing it 3% month over month. And they can have a December that is amazing, but they can have a January in zero. And you need to understand those flows, and you need to understand how to move your credit line against them. So the biggest one is there is a need to understand the company in every, like, pretty often. There is a period when you need to do it pretty often, and you need to grow also with the company, not only to stop the credit line or to lower the credit line, but to get higher credit lines. So if December is going, you need to stay with that company in December, and you need to get higher credit lines of credit in December to accompany that company, to stay with the company and to really take advantage of the growth that it can have. And then January is going to be another month. You're going to lower your risk, your credit limits, and you're going to have another relationship, like type of relationship with the company. But yeah, you need to understand the company like every day. That's one of the biggest. Like, it's not one day that you understand and you understood the company. Like, you need to really pay attention to the company every day.
What's the greatest operating leverage you found in scaling so far?
Do it with partnerships. So for us, it will be impossible to do it finding companies in Instagram. It will be too expensive. And whenever a company reach out to us and is like, I need credit to grow, and it happens a lot. It's not a great answer that we can say, like, we cannot give you credit because you're not buying from the suppliers that we are working with.
Yeah, tell your supplier to go work with us.
And that usually works. But it has to do the whole round to get to the partner to work with us so that we can give credit to the suppliers. But for example, I was with a webinar today, and we are doing it with we're working with construction companies, and they say, like, nobody's giving us credit. Can you give us credit directly? And I was like, we already have like 5 partnerships in construction suppliers. So I started giving a list, like, if you buy with this one in Colombia, and I had the regions mapped, you can buy with credit. And it was like, that's incredible.
Given the current climate for fintech in Latam, what's your biggest headwind and your biggest tailwind?
So money, it's our biggest leverage. I think that money, like the paradox that I usually talk, there's a lot of money, and I usually have to stop having conversations with private funds that need to deploy more money. And it's like, I cannot have conversations. I have private funds that can go up to 100 million, and so yeah, it's not easy to open those conversations, but yeah, there is a lot of money that needs to be deployed into.
That's the biggest tailwind. There's lots of money available.
Yeah, and I think the hardest one has been like getting fundraising. Just to be honest, like, it hasn't been a good time. What we have shown is we can do it with going 20-25%, and whenever what it has worked on that is we have changed the way we reach out to investors, because we don't need that money. So what we do to investors is, like, you want to get into a business that is going 25% month over month. We have this mission, we have this, but it's not like crazy asking for the money and crazy looking for it. It's more a relaxed position that we have achieved, and that's been working a lot.
Yeah. Well, especially as you kind of hit critical mass and you only need to raise to go faster. You don't need to raise to stay alive. It changes the dynamic, a bit.
It changes everything. Even your face when talking to an investor, right?
Yes. I mean, same for me. Like, I'm on, fund 3, right? So I've been stacking management fees, and, I got to raise another fund, but like, it's not like dire, it's just raising so I can keep doing what I love doing. It's not raising because I like need to raise or I'll won't have any money coming in. It just changes the whole dynamic. So I could totally relate to that.
It changes the conversation from a whole perspective, and they kind of see you with a different energy. They even ask for different information.
Yeah.
So the conversation the conversation is really different, and that's something that really burned me at the beginning. And now I'm happy that we have arrived to this situation where I'm pretty easygoing with every VC investor that I talk.
I love that. What's the most underrated data signal in lending in the SME space that you think others ignore?
It's also a good question. I'll probably talk about cost of operation, like operational cost of every penny that you're giving in a credit. I was thinking about like conversations we have with VCUs or funds, and it's really hard. It's not often that somebody asks about our operation cost. So if we are winning 10% of every month, like how much is your operation cost on that 10%? The people that know more about lending usually ask for that, like how much of the lending cost is the operational cost?
Yeah, there's like servicing rights and operational costs, and there's kind of stuff built into that rate, right? I did mortgage-backed securities on Wall Street 20 years ago now. So I kind of remember valuing all the different kind of slivers of rights and margin, and yeah, it's pretty interesting.
And there is a lot of thought about operational costs, like which are fixed costs and which are flexible costs. So, for example, how much does it cost every payment that you receive? Is it in the future to create a payment solution to reduce those costs? Because if a payment is receiving 1% of the 10%, it's a big amount only to receive the payment. Like the payment, how difficult it is to match a payment with the client or the loan. How difficult or how big is your recovery team? Is it really very scalable, your recovery team? How many calls do you have to do? Do you have some leverage on the clients that you're lending for them to put you first on the payment priorities? And that's also very important.
What's a really hard mistake you guys made early on, and what did it teach you?
I think we do off-balance lending, in which we like kind of do it with other people money or with private funds. And we also do on-balance lending. That on-balance lending let us understand how lending works,
balance sheet, right?
On balance sheet.
Off your own balance sheet, yeah.
When we do it with our money, there is a double incentive on that. You need to grow revenue, so you need to lend as fast as possible, but you also need to be aware of your default rates. So there is always two sides of every loan that you give. Like the commercial team is going to be happy, but then in 3 months or 6 months, the recovery team is not going to be that happy that you lend that money. And that's what they are usually like. It's not usually fast for a bank to give a credit, because they have a credit risk assessment in the middle that it's not measured by revenue or is not measured. So I think one of the biggest mistakes that we make is we kind of got excited with the revenue, and maybe we gave more loans, or the credit scoring system got more relaxed because we wanted more revenue on that side. And then it hit us back 3 months ago, like 3 months after.
Yeah. Amazing. Well, I really enjoyed the conversation. I think anybody who's interested in Latin American finance and fintech is going to learn a ton. I sure did. And I'm glad we're on the cap table. Thanks so much for coming on.
Brian, thank you. Thank you for the invitation and Team Ignite. You arrived at a great moment. I'm really grateful for that. And I'm sure you're going to have more awesome companies like us in your cap table if you keep doing it like that. Thank you very much.
Thanks, Nicolás.